Welcome back. I'm Pratap here. Today is the 17th January 2025. In this video, I'm going to evaluate the performance of high liquidity zones generated in our yesterday's end of the day report. Before that, all of you please understand we are providing complete free training on supply demand zone price action. You might be knowing the cost of the training is over 8,000 US dollars. And this is a completely free training. All the training lessons you can access at our NeoStock YouTube channel. At our channel homepage, please click on this tab posts. Some of you might be seeing the tab community. Click on the tab. You get access to this post having our free training course. And did you observe a link in this post? This YouTube playlist link will take you to all the training videos. You just click on the link. Now we are into supply demand zone price action course. Here you have all the training lessons are available. You need to start your training from lesson 1.1. For that you need to scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. Please join at our Telegram channel. It will be helpful to you. Each time when we release a YouTube video or any other very important updates, we will be providing at our Telegram channel. Now let's get into the analysis of high liquidity zones identified in our yesterday's list. Yesterday, end of the day, we identified two high liquidity zones from daily and 75 minutes time frame. Both are demand zones, that means long trades. And out of these two, we got a trade from one stock, that is Wipro. Wipro is a daily high liquidity zone. Our software considered this as a rally, two base candles and a rally candle. This is the failed ERC software considered, so it's a rally candle. The dynamic viewpoint of view. And this daily zone we fine-tuned with 75 minutes time frame. Here we have two order flows are there, 75 minutes order flows. First one is a drop, two base candles and a rally. And the second one you can consider this as a failed ERC candle as a drop, one base candle and a rally. These are the 275. But first one you see it is overlapped at the proximal line of the daily high liquidity zone. That's why you should make sure your fine-tuned zone should be within the zone, not outside the zone. Outside the zone, sometimes it will work, but the success rate is less. So that's why fine-tuned exactly within 75 minutes only, we will be giving top priority. When there is no option, we will take a risk. Always remember these points. They are very, very important. Okay, we have 275 minutes order flows. Again, these 75 minutes, within 75 minutes, we should fine tune with 15 minutes time frame. So let's look into the 15 minute zones. Here you see you have a rally candle, a big candle rally. This you can consider as a leg-in. And then you have 1, 2, 3, 4, 5, 6 base candles. And again with hidden body rally candle, dynamic view with hidden body. So, and what about here? Here you have a drop candle here. And then you have 1, 2, 3, 4, 5, 6 base candles. And then a rally candle. This is the 15 minute zone. So we have two fine-tuned 15 minute zones. Now again these within these 15 minutes zones identify fine-tuned 5 minute zones. So I'm going to the 5 minutes time frame. Here in the 5 minutes time frame, first we will look into this. So I consider this as a failed ERC candle as a leg-in, and then two base candles and a rally candle with the hidden body. The moment you add the hidden body, you get a big candle body. That is good enough. This is another fine-tuned 5 minute zone. Then what about here? Here you see you have a drop candle, you have a base candle, and then you have a rally candle. Actually, I consider this as a leg-in. This still I consider, because medium size candle, I considered base only. Anyway, whether you consider this as a leg-in or this one as a leg-in, it doesn't make a difference. Still see, the zone is going to be the same. Almost same. So here you have a rally candle. Failed ERC as a rally candle, failed ERC. Two base candles and again another rally candle. This is the fine-tuned 5-minute zone. You can also draw a zone, rally, base, rally here. But why I didn't consider this? See, you can draw a zone like this. The reason is this zone is coming outside our daily zone. This fine-tuned zone is coming outside the daily, completely outside. It is not even overlapped at the distal line. So medium size a leg candle, a base candle, and a large candle rally. So this is the reason why we didn't give any importance to this zone. Our focus is on the fine-tuned zone. What about this zone? It may work or may not work. We don't have much guarantee on this. At least this zone we have 80% success rate. Because we are looking for order flows within the high liquidity zone. Our high liquidity zone is daily. You can't go outside the daily zone. Outside the daily zone, only in the dynamic entry buffer concept only you can go. But dynamic entry buffer concept, you should have a price action clue at least once. And this is not qualified as a dynamic entry buffer, this rally, base rally. The reason is it doesn't have any price action clues. This one. What is price action? At least one test should be there at the zone or close to the distal line. Such kind of things are not there. So that's why our focus is on this drop base rally. And today what happened? Prices, okay. Today prices entered into the zone, fine-tuned zone. But what is the target? See, because of this huge gap, your target should be the end of this gap. Because up to here it consumed the order flows. After that failed to consume before prices entered into our entry zone. So that's why I have drawn a blue color line here. That should be the target. Until there, are we getting a minimum 1:3 RR? That is important. If you don't get 1:3 RR, you can't take the trade. And we got 1:3.6 RR is there. It's good. And it gave a test. After that, prices were moving and it didn't reach up to this. Even 1:3 RR also it did not achieve. Again, it gave another test. In case if anybody missed in this trade, you could take another trade here in case. But you are already in the trade. You have no option. Either you have to wait or it should hit the stop loss. See, now slightly the fine-tuned zone is pierced, but it is within the stop buffer. Observe. Look into this candle. It is within the stop buffer. Here. And then now again prices started moving up and reached the exactly this gap area. Definitely this could be some pro gap in some time frames. So maybe let us check 15 minutes. Now 15 minutes we don't have a proper zone here. What about 75 minutes? Yes. It is a 75-minute zone. Drop, base, drop. So this is the 75 minutes area, pro gap area. Definitely this would be very strong. Drop, 3 base candles at the hidden body from this candle cause you get a drop candle, big candle, 75 minutes candle. So 75 minutes pro gap is much powerful than 15 minutes pro gap. So you can't take any risk. Exactly at this pro gap area you need to book your profit. Because you never know how strong the order flow within this pro gap area. So you already learned in phase 1 training program. Pro gaps are very powerful. So that's why always whenever there are pro gaps are there, we always keep exactly at the pro gap area or a little before the pro gap area, you will exit that. You will book the profits. Okay, definitely, practically, you book profit a little before pro gap area. From where the gap is there, it's not yet filled. Up to this blue color line area, orders are filled. And above the orders are not filled. The existing order flow, anytime it may push. Maybe next time it may go some more inside and it may come down. Exactly previously where it went, from there it will come down. Sometimes even a little before and then again it will come down. Maybe new order flows might have been added, at the time again it will push. Now exactly the blue color area it reached. But practically we will exit a little before that. But okay, technically means theoretically it reached our target area. Let's go to the 5 minutes. Now it is a successful trade. Now you may ask a question, can we take again next time another one more trade in this zone? No, because the fine-tuned 5-minute zone is pierced. If it is not pierced, we would have taken another trade because it is an intraday trading. Nothing wrong in trying another trade opportunity. If it is violated, okay, small loss we get, but already earlier we got good profit. But it is already pierced. Pierced means that's it. This order flow, institutional order flow is gone in this area, in this fine-tuned 5-minute zone. Taking another trade is risky. Okay. See, after that prices again falling down, maybe some movement here, some intraday zones might have been pushed, again came down, but most of the time. But we don't bother about all these things. What we are interested is, this is the area we got. Got it. So how much profit it has given? Wipro. So Wipro has given 7,050 rupees profit, which is 4.6% ROI as per one futures margin cost. It's a good profit. Maybe our intraday ROI is, average intraday ROI is 6%. Compared to that is at least 1.4% lesser, but still 4.6% ROI is a very good ROI during the intraday point of view. High liquidity zones point of view, it is small, it is less, but this is okay. But remember, anyway, our intraday ROI is only average, the 6%. Sometimes we get less, sometimes we get more. See here we got 13%, 11%, sometimes 6.6%. Anyway, the difference will be there. So this is about Wipro. And next one is the 75-minute zone, that is Hindustan Unilever. This is a 75-minute high liquidity zone identified by our software, and today price did not enter into this zone at all. See, today's candle 75, we have 5 candles in it during intraday. 1, 2, 3, 4, 5. All 5 candles are outside the zone. But how we fine-tuned this zone? So this one is fine-tuned with 15 minutes time frame. See here you have a drop, base, rally is there. This is the 15-minute zone. And what about here? Here we have a drop, base, rally is there, 15-minute zone. See here I have drawn drop, base, rally. This is the 15-minute zone. This 15 minutes. Okay. And both these 15-minute zones, again you need to fine tune with 5 minutes time frame. Here you have a 5-minute zone is available. You have a drop candle, medium size, small candle, medium size, and a base candle and a rally candle. See, look into the drop to type 1. Type 1 is just touched. But type 2 is valid for our institutional order flows. We have enough order flow is there. And type 2 is not yet tested. Definitely we can plan a trade next time in this area. And what about 5-minute zone? Do you have any 5-minute zone here? It looks like there is a rally, base candles, rally, right? But actually, there is a 5 minutes horizon. Look into this 5 minutes horizon. Failed ERC candle as a leg-in, as a rally candle, base candle, rally candle. This 5 minute zone is the horizon for this entire 75 minute zone. See, it picked up the orders from this horizon and again prices moved very sharply. From the horizon it picked up. So that is the reason why definitely this horizon holds good. Next time exactly or a little below the zone it will go pick up and again it will move out. But before that this zone has to be violated. We have one more order flow. But anyway, today we did not get any trade opportunity in Hindustan Unilever. So these are the two high liquidity zones identified in our previous report. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.